saving, it therefore means that when one reaches 60 years, the person would have saved 42%. Now, that falls within ILO minimum standard. Of course, this is the minimum. When you look at countries in the Scandinavia, the minimum standard is over 80%. As Kenyans, we are still struggling and we are fighting in court. We don't even believe in 6%. And that is something that as Kenyans, we need to ask ourselves. If you look at what we are providing for invalidity, again, 40%. If you look at what we're providing in survivor, the minimum is 40. But if you look at what under Cap 258 NSSF was providing, it was not anywhere near. But when you look at NSSF under number 45 for 2013, with 6%, NSSF will be doing 42%, which is within the ILO minimum standard. Now, let's look at Kenya vis-a-vis other countries. Remember, Kenya, we are doing 200 shillings. And we are in court to say, may we remain in 200 shillings. The United Kingdom, employer is 13.8%, and the employee 12%, making it 25.8%. When you look at India, employer is doing 12, employee 12, making it 24%. Uganda, our neighbor here, the mandatory, employer 10, employee 5, making it 15%. Tanzania, employer 10, employee 10, making it 20. Now, actually, Brazil, for those of us who have been reading, you know about the BRICS. BRICS being Brazil, Russia, India, and South Africa. These 5 countries, they have developed because they have spent so much in social security. Look at Brazil, employer 26%, employee 8, making it 34. Ethiopia, employer 9, employee 7, total 16. Ghana, employer 13, employee 5, making it 18. In Kenya, we are in court, in the Supreme Court, we want 200 shillings. Sure. We must think as Kenyans, what do we really want? Now, based on that, if we have to think about as a country, we must think in terms of, we must learn to accept. We must learn to accept that for us to really grow, for us to save, for us to have a comfortable life, you know, Vision 2030 talks about living with dignity. You can't live with dignity if what you can accept and you want is 200 shillings. So we really need to really ask ourselves, and we really need to look at what is affordable. The 6% that we are talking about, indeed, it is not a competitive with what is in the region, but this is what, as a country, the government looked at and said, this is possible. 6% employer, 6% employee. And of course, you realize later when we go to the tier 1 and tier 2, there were the issues of acceptability, the issues of affordability, and of course, the issues of accessibility. I mean, how do we make social security accessible to everybody? And again, the issue of creating awareness. And that's why you realize, for instance, even these income and financial inclusion programs that we are talking about. Now, with that kind of background, then let's look at NSSF and look at NSSF's contributions. Employer 6%, employees 6%, making it 12%, because this is what was proposed by the NSSF Act number 45 of 2013. But again, you realize that this act introduces tier 1 and tier 2. Now, when you are talking about tier 1, you are basically talking about the minimum wage. And when you are talking about tier 2, you are talking about income replacement, really, that you get as much as possible from what you are earning. But the question is, we need to ask ourselves as Kenyans, what created this tier 1 and tier 2? If you recall, there is that slide I showed you about the architecture of Kenya's social security. and pillar 1 being NSSF, pillar 2 being employer-based schemes. If NSSF was to have both tier 1 and tier 2, this would have pushed the employer-based schemes out. But to promote competition, to promote and ensure that all players in the industry had some access, there was need to create this tier 1 and tier 2. Tier 1 basically is the what you can regard as the minimum wage. In Kenya, we have the minister normally declaring what is supposed to be minimum wage. And again, tier 2 is the amount over and above the minimum wage. Now, if you look at what I've just put in the middle there, I'm saying tier 1 contributions are to go to NSSF, and the tier 2 contributions can be paid to an employer's private scheme, or they can be with NSSF. Now, this is very, very important, and this is what really, as workers in Kenya, we need to look at. As a public mandatory scheme, it is about solidarity. It is bringing every Kenyan together, and tier 1 brings everybody together at that minimum level. The tier 2 contributions are contributions in respect to the pensionable earnings up to the upper earnings, and I'm going to explain this. That is for year 2023, and please let us focus on year 2023 because it will be easier to understand than going beyond. Now, for year 2023, the upper earnings limit is placed at 18. So the amount between 6,000 and 18,000 is what is considered as tier 2. The amount between 6,000 and below for year 2023 is what is considered as tier 1 and 6% of it. And we're going to see this. But what is important here is for us to understand what is the philosophy behind tier 1 and tier 2. The philosophy behind tier 1 and tier 2 is to promote competition, is to ensure that NSSF competes with other players in the industry. So with tier 1 and tier 2, it means that the sector is going to be vibrant. It means that only those schemes that are working and are making attractive interest returns are going to attract members. And you realize, as we'll see later, it is in tier 2 where the money is. Now, like I said, in 2013, when this act was enacted, the lower earnings limit, although in 2013, the minimum wage was 12%, the government said, if we put 6% on 12,000 immediately, it may affect and it may cause instability in the employment environment. So rather than putting 6% on 12,000, the government put 6% on 6,000. And it was envisaged that during 2014, it was only 6,000 of whatever amount one was earning that was to go to tier 1. And in 2015, only 7,000. I mean, in 2016, 8,000, and 2017, 9,000. And you can see the idea was to ensure that the employment environment is not destabilized. But again, the beauty about it, ask yourself, if this was the proposal in 2013, and we are now implementing the same in 2023, what does it mean? I want you to look at it this way. In 2013, 6% of 6,000 was 360. With 360 in 2013, you would buy 3 liters of fuel. With 360 in 2023, you can only buy 2 liters of fuel. So again, you realize what we are reading in the papers, that there is an increment, there is what. Look at it in terms of value. Remember what I said earlier. In 2001, 200 shillings you would buy 5 liters. In 2023, 200 shillings can only buy you 1 liter. So ask yourself, and we need to ask ourselves as Kenya, what do we mean by an increase? What does increase mean? And this is very, very critical, because you can't talk of you want to retire happily in dignity, but when you look at the value of your contribution, it doesn't reflect the same. Now, I want to very quickly run through this, because I know after 1 month, and of course, most employers have made contributions. In year 1, when you look at the 4th schedule of the NSSF Act, it provides on how it should be done. Year 1 for 2023, the tier 1 is 6% of 6,000, which is of course 360. And that any amount above 6,000 will go to tier 2. And to explain this one slightly better, I want to
Bana Richard, I think you muted yourself. Or is it on my end? You can unmute.
It informed me that the host has unmuted me.
Yeah, we were trying to mute someone, and as you progress, we have some questions coming through. Members, let's keep them coming. And we will be ending at 9:30, and we will try as much as possible to have answered as many questions as possible. So keep them coming, either on open chat or directly to my inbox. Thank you.
Thank you so much, Irene. The slide that is before you is a simplified way in how we can calculate this. Whatever amount one is earning, you will have to subject that to 6%. Any amount between 6,000 and between 0 and 6,000, the whole amount will be subjected to 6% employer, 6% employee. And if we take the example under 1, if one is earning 3,000, it means 6% of 3,000 is 180. The employer will contribute 180, the employee 180, making it 360. If the employee is earning 4,500, you will see it will be 270, making it 540. If the employee is earning 6,000, 6% of it, employer 360, employees 360, making it 620. Now, if any amount above 6,000 under year 2023 up to 18,000, it will fall under tier 2. For instance, if a worker is earning 10,000, remember 6,000 will go to tier 1, 360. 4,000, if you calculate it 6%, it will give you 240. So that worker essentially will contribute 1,200. If a worker is earning 18,000, and that's the maximum for year 2023, 6,000 of it will be subjected to 6%, meaning making it 720. 12,000 will be subjected to 6%, making it 720. So a total of 2,160. It doesn't matter whether one is earning 1 million, it's only 18%. that will be subjected to NSSF deductions. And again, only 6,000 of that amount will be subjected to tier 1, and the remaining between 6,000 and 18,000 will be subjected to tier 2. Please, let's stick to year 2023 so that it's easier for us to understand as I want to conclude this. Now, it is envisaged under the NSSF Act that after this has been done, if we contribute 6%, 6%, then you can see in that photo 1, I don't have to ask you who that is. Photo 2, I don't have to ask you who that is. I'm sure you are able to tell. Photo 3, I don't have to ask you who that is and what benefit that is. Photo 4, you can see a passport. That means that's the migration grant. Again, photo 5, you can see that's what NSSF is providing in terms of funeral grants. Now, these are the benefits that are proposed to be provided by the NSSF Act number 45. Now, there are a few things in that act that is important that we recognize. Both tier 1 and tier 2 contributions are tax deductible. Again, the investment income may be tax-free. And all the pension shall be taken tax-free. When you retire from this webinar, kindly look at section 66 of the NSSF Act. Now, of course, one may ask about the Income Tax Act. What does it say? What the government is looking forward to is how to encourage as many people as possible to save. And that's why you realize NSSF Act provides for that tax exemption to the pension. Now, the question is this: with that kind of discussion, what next? What next? NSSF Act is here. 9th came the other day. Employers have complied. They have paid 6%. But that act under section 21 provides for opt-out. Some employers have schemes. Remember when we looked at the RBA statistics, we noted that there are 1076 schemes. Now, and remember again, we just said earlier that tier 2 provides for competition. Should an employer stay in NSSF or should an employer opt out? And if one has to opt out, what is the way out? Now, of course, these are decisions that one have to, you have to ask yourself as an employer, do you have a scheme? Does your employer have a scheme? If yes, section 21 of the NSSF provides for opt-out. Does he want to opt out? If he wants to opt out, what do the regulations and what does the act say? It's important that as we retire from here, RBA has already issued a notice for those employers who want to opt out. And you will note that some conditions are put there. It is important that as we think about opting out, that we are guided properly. It's important that we all know that to opt out, you must be in. So as employers, it's important that we ensure that as we seek to opt out, because these people that we want to move to our schemes, we must demonstrate that currently they are contributing their tier 2 to NSSF. And that's why it's very, very important that we ensure that all staff are covered. Remember, the NSSF Act, the goal of the Constitution is to ensure that every Kenyan is covered. Every Kenyan has a right to social security, and it's important that as employers, you look at who amongst your employees are you going to opt out? Who amongst your employees are you going to live with NSSF? It's also important that when you are applying to opt out, you ensure that you are living with everybody, because again, you realize how it's going to challenge you when you leave some people out and you now want to opt them out. So it's very, very important that you go through this. We have noted there are very many institutions that are willing to offer this service. You can also go to RBA so that they guide you how you can opt out, and RBA is readily available to provide that. But again, you need to ask yourself, what do you really want to do with tier 2? If I were to be asked as Richard, I would encourage employers to maintain the schemes that they have, and also to try and see on how to enable workers save more, because at the end of the day, workers need more money when they retire, and try to see on how you can save as much as possible. And this is a conversation that as workers need to have with their employers and see how best it can be done. Having said that, allow me to make this statement, and it's a caveat that I'm trying to say that, look here, you know, as this tier 2 thing and opting out is coming, as employers, you are going to be told very many stories by most of the umbrella schemes, individual plan schemes, and any other scheme that want you to be their members. They'll promise you, for instance, oh, we shall give you prompt support during the process. They'll tell you that they have got a dedicated relationship manager. They'll tell you that they have a guaranteed return. They'll tell you that there is self-service digital channels. They'll tell you that there is free member education. They'll tell you that there will be prompt settlement of pension. They'll tell you that there will be transparency. Now remember, employers, you are like a very beautiful or handsome man. All these umbrella schemes are out for you. Please take your time before you choose which scheme you are going to. Do your research well. Remember, after you have attained your certificate, again, it will be very painful if you discover that you didn't make the right choice. Do due diligence. Schemes are going to come to you. Please take your time. Remember, even if you took 1 year to opt out of NSSF, when you opt out, all the money that you have contributed under tier 2, you'll go with it. So it's better you take your time, you make a better decision than rush and regret later. Because all schemes will come with this. Every scheme, every umbrella scheme will come with these sweet words. How they are ready to come, we'll show you the way. But please, think seriously. Do your due diligence. Involve the workers that you want to opt out with, so that they understand why and how. Now, ladies and gentlemen, you know, we can't hide from our financial future forever. We can't. We can't. Remember, diamonds are forever, but a good pension is our best friend. A good pension is our best friend. And this evening's intention was to invite and encourage all of us to think about how can we have a good pension for our old age. And in conclusion, sound retirement regime is essential. However, sound investment is essential for the realization of comfortable retirement for our people, for our societies, and everyone. Ladies and gentlemen, thank you so much.
Wow, thank you. Thank you so much, Mr. Richard. And I think I want to pick it up from the point at which you asked what's the way forward. Having heard all this, I know there is quite a discussion that has been going around, especially on matters, the ruling in regards to the NSSF Act and the increment of the contributions. I can see we have a number of questions. Mr. Richard, I can see you have walked away from the camera. I hope you can still hear me because we have a number of questions again for you. Yeah, welcome back. So I think I'll ask maybe 2 questions at a time. We have about 10 minutes to the top of the hour. And I can see someone with the gadgets, Xiaomi, is really enjoying their meal. It is part of Social Security. If I know the person, I think it looks like my one-time neighbor. So allow me not to mention the name, but they're really enjoying their meal. So maybe Xiaomi, you could mute your video. It looks like you're enjoying ugali and fish. You are making some of us feel hungry. But now, with the questions that are coming in, Mr. Richard, I think the first one is that will the new regulations challenge the bonuses issued and the costs incurred in managing the NSSF funds? Otherwise, it will be like saving in a bank account that gains nothing. The issue of the interests that we get, or the bonuses that we get after saving with NSSF, will the Act address that, or will that be challenged? Or will it be just like saving in the bank where basically you get no interest, but your deposit is consumed courtesy of the administration charges? Then we have another question. Maybe you can handle those two. Which says, Mr. John Sitawa, good to see you. It says, historically, the NSSF has been a cash cow for government operatives, thus the apathy and suspicious approach by most Kenyans. Please address the new approach in appreciation of the past. What assurance do Kenyans have at the NSSF that the NSSF will not be another scandal? And I think what these two are asking is the issues of, yes, we will have saved our 6% and 6%, which means 12%. What is assurance that we are going to get some reasonable interest on the money that we put in? And then the other question is about the integrity of the NSSF as a body, so that much as it's been known to be a cash cow for many years, can we be assured, or what approach are they going to use to ensure that it doesn't end up being yet another scandal? Mr. Richard, maybe you can respond to those two, and then I will add some more as we progress. Members, feel free to keep the questions coming either on the open chat or on my inbox. Mr. Richard.
Thank you so much. Thank you so much, Irene, and thank you so much, dear participants, for the questions. The NSSF Act number 45 of 2013 took cognizance of the weaknesses of CAP 258. CAP 258 had no controls on administrative costs. Under NSSF Act number 45, please, when you retire, look at Section 50. Section 50 caps administration costs. In 2023, it caps them at 2%, and in the next 5 years, in the next 6 years, NSSF is expected to have its administration costs below 1.5%. So, those are trusted there. The law requires that administration costs are below 2%. This, therefore, means that all that is earned shall go to the member. It's important that we say here, if you look at the NSSF Act, currently 80% of NSSF's investments are done by professional fund managers registered by RBA. And NSSF, if you look at Section 71 of that Act, NSSF is under the supervision of RBA. It's also important when you retire from here that you look at Section 48 of the NSSF Act, and you realize that NSSF is required by law to invest according to the guidelines of RBA. This is already enough protection. But again, historically, like you said, and you're quite right, really, that NSSF, there were abuses, and that is why the NSSF Act number 45 came into force, to cure and treat those historical abuses. And if you look at the Act, and I will invite you to look at Section 54 of the Act, any trustee of NSSF who is found to have abused his office rights is liable to being brought before court and receive not less than 3 years jail and a fine of over 2 million. Again, the same to the members of staff of NSSF. So nobody has been protected by this act. Everybody is expected to uphold high levels of integrity. It's also important that we look at it and how does one become a trustee in NSSF. There are no trustees forever in NSSF. And if you've been checking and you've been watching trustees after completing that period, they retire. This is again meant to promote integrity. You will note that currently NSSF is recruiting its CEO, and it was advertised. What I want to believe, and I've not yet, and nobody has really asked me to talk about them, but I believe all these lead to what you call integrity and high levels of governance. Thank you.
Thank you. Thank you once again, Mr. Richard. And maybe you can stop your screen sharing as we progress. I have yet another question for you. Somebody is asking, are employees earning less than 6K required to contribute to NSSF? Are employees earning less than 6K required to contribute to NSSF? And then there is also another one, maybe you can handle the two together, saying that when we compare ourselves to the to other countries, Uganda, Brazil, etc., let us check the environment under which they operate. For example, Uganda, where NSSF is the only pension scheme, as opposed to Kenya, where we have private pension schemes. So a comparison from one nation to another. And then another comment also saying, let us face the reality that currently the country is polarized politically. So anything won by the government of the day will be held in suspicion by the opposition. So it may not be a most appropriate time to implement the new NSSF. I think you can maybe respond to those two comments and also the question of a person who is earning 6,000, are they supposed to still contribute to NSSF?
Thank you, Irene, and thank you, member participant, for that question. Let's go back to where this discussion began and what we said. Social security is a right, and every Kenyan has a right to social security. And I did say that Kenya's social security system is a right-based system, and the Constitution provides the same. Any worker working in Kenya, regardless of the work that person is doing, regardless of the amount that that person is earning, as long as that person is earning a payment for the work done, is expected to register with NSSF and contribute for his social security. Remember, when I was showing the calculations, I showed 3,000. I would have gone all the way down to 1,000, which is 60-60. And what we would advise, and indeed, look at even in America, you can't even do a sweeping job without being registered as a member of Social Security. And really, let us encourage our people. There will come a time when they won't even wash clothes. And now I'm throwing this question to you. If any of us is participating in this discussion, and you have a worker, a domestic worker in your house, and honestly, you are not contributing his or her social security. If any of us invites on a Saturday, on a Sunday, somebody to wash our clothes, there will come a time when that lady will not be able. It is important. Please, let's find it in our heart. Let's not talk about how much one is earning. Let's talk about the future of this person. Let's talk about the future of our people. Some of these things, let's put the law aside. To me, the success of social security in this country should not be based on the law. To me, the success of social security in this country should be based on you and I. Let's encourage our people, even casuals. Look at like now the casuals, what Wamjengo. You know the minimum they earn is 1,000 a day. If you calculate that in a month, that is about 30,000. Honestly, that person should save. A person earning below 60%, we said the law in Kenya is very, very clear. It does not accept any person working in Kenya. Irene, am I still on?
Yes, you are on. We can hear you.
Yeah, because everything disappeared. Then number two, we have talked about the issue of our countries and the environment in which they are in. When the NSSF Act was being drafted, all that consideration was done. Remember, I showed you the ILO Convention 102 and the minimum standards. If that consideration was not done, then we would have gone to 12%. I mean, to 15% of Uganda. We would have gone to 20% of Tanzania. By the way, I'm inviting you to look at the Ugandan case. We have got private schemes. Britam is in Uganda. And you look at even in Zambia, Britam, Octagon are there. There are private schemes there. Jubilee is there. So we can't say that private schemes are not there. If you look at Uganda, you'll find employers. Central Bank of Uganda has a scheme. Uganda Revenue Authority has a private scheme. So they are there. But the government has said that notwithstanding, we must have a strong public mandatory scheme. No country, look at Ghana. Look at even Burundi, poorest country in Africa. Look, they have a better scheme than ours. Look at Rwanda. Look at even Ethiopia. We honestly, as a country, must ask ourselves, do we want to embrace prosperity or do we want to embrace poverty? Again, the issue of polarized, look here, politics will be there forever, but we have a constitution. NSSF is a creation of the Constitution of Kenya. Please, when you retire, look at Article 21. The Constitution requires the states to come up with laws, policies that promote and ensure the realization of Article 43. So it doesn't matter who the president is, which party is in power. But again, remember, even as we talk about today, NSSF came to force in 2013. The government of today was not there when NSSF came into force. So basically, if we bring politics into the future of our people, we are destroying this country. Thank you.
Thank you so much, Mr. Richard. And I think the questions continue to come. Someone is asking if someone is on gratuity, which is converted to pension, how will this be treated? You can answer that, as I also request Christine, if it's possible for you to share the link to our life skills page on this platform, so that those who are able and want to join us for future communications, they can do that. As Mr. Richard shares, if someone is on gratuity, which is converted to pension, how will that be treated? Maybe in 1 minute, because I'm trying to see how much we can handle as we try to catch up with the 10 minutes that we lost. Christine, you can share that link.
Thank you, Irene. I have had the privilege of looking at matters being canvassed at the Supreme Court, and gratuity is one of the matters that is being canvassed. But what I can say, Section 35 of the Employment Act, if you look at Section 35 and you look at particularly Section 35, subsection 5 and 6, you will realize that the Employment Act has provided on how gratuity and matters pensions should be handled. And again, let us not confuse gratuity and pension, because then again we'll confuse ourselves. But again, for those who want to read further, you realize that a lot has been discussed. But because this matter is a matter that is before the Supreme Court, allow me not to discuss much about it, and let's see how the court makes a decision on it. Thank you.
Thank you. Thank you so much, sir. Christine, I'm still waiting on you to share the link for those who may be interested. When you say we don't mix issues of pension and gratuity, I think for people who may want to learn more about pensions and the deep details about the differences and all that, I will be sharing with us some of the programs that we offer that can give you a very detailed information about pension. I call it the pension manenos. We even have a very comprehensive curriculum in the name of Certified Pensions Manager, where you can learn everything to do with pension management. At the end of the day, you're going to acquire yourself a competence-based curriculum qualification under the Ministry of Education called Certified Pension Manager. But before we close, we must answer this one because I think it has been sent to me on a number of times. And the question, Mr. Richard, is NSSF receives contributions from individual people's salaries. We are talking about the 6% from the employee and the 6% from employer, which is basically the person's earnings. Then the question that comes in on that, is this government funding to provide me with the social security? Somebody feels that whatever we are calling to NSSF is their personal contributions, of course, with the employer's contribution. What is the part of the government in as far as the provision of social security is concerned? In relations to the same question, is this one that says, is NSSF a retirement benefit scheme or a social security system? You can answer those two, hopefully in 1 minute.
Thank you so much. Right, I'll say like this. When I began my discussion and presentation, I showed exactly how Kenya's social security system is structured. I also indicated how the proposed future Kenya social security system will be, having income security, healthcare insurance, shock and responsiveness, and of course, Pillar 4, complementarity. I went further and indicated that when you read Article 43, that makes social security a right. When you read Article 43, sub-Article 3, it states very clearly that for those who are not able, the government will support him. But again, we have to ask ourselves a very simple question. In a country where almost 40% of our population live before poverty line, what should we do? Should we as a country keep quiet and let more fall into poverty? The most important thing the country has to do is to ensure that those who are able save. Remember, one of the reforms and the causes of the reforms was that as we speak, saving in Kenya is 13%. Remember our president the other day called it a joke. And unless we do something, it will remain a joke. Then the question about what is the government contributing? Please, when you retire, look at Section 70 of the NSSF Act. And when you read that section, you realize that the government is guarantor of the NSSF scheme. Meaning, if there were to be any liquidity challenges, the government will step in. And that's why the government sits in the board of NSSF. And if you check all the other schemes, you won't find the government sitting in the board. And that guarantee That guarantee is so critical, and the government has a responsibility also to oversee how the funds of NSSF. And that's why when you look at Section 51 of the NSSF Act, NSSF is audited by the Controller and Auditor General of the Republic of Kenya. Thank you.
Wow, Mr. Richard, it seems like we just woke up, because this is the hour that the questions are really streaming, and I'm only going to give us another 5 minutes so that we can see if we can handle any, maybe one or two more, and then we call it a night. And any other question that will come after that, we will request that we will answer them in another forum. Christine has shared the link to our life skills and emerging issues group, which you can join for more updates, as we can also continue to handle these questions thereof. But there's one more question that says, the Constitution makes provision for right of association. Is it reasonable for employees who have their own retirement benefit schemes to associate themselves with NSSF? And then another one that says, if in 1994 to 1996, a record of investigation of the Kenyan pension identified NSSF as guilty of maladministration, poor investment, and poor returns, what is the current status in regards to that matter? As we progress, as Mr. Richard handles that, Christine, you'll also help me to share our pension courses through our academic and professional courses as we come to a conclusion. Mr. Richard.
Erin, there is also something I wanted to correct, which has been said, and it is not true.
Mr. Mwangangi, we can allow Richard to respond to that, and then I'll give you a chance as we come to conclusion. Yes. Yes, Mr. Richard, you can respond to those two questions, and then we can progress.
Yes, thank you so much. The right of association is provided under Article 41 of the Constitution. And we are discussing Article 43 of the Constitution, which Article 21 of the Constitution seeks to realize. So basically, right of association is different from social security. So we need to distinguish these two and look at what are the objects of right of association, what are the objects of social security, because it really can make us come to a better understanding. Now, the issues of 1994, 1996, and remember I did say earlier, historically, under Cap 2558 of the NSSF, there were many wrongs which number 45 sought to address. And I want to believe when you look at the objects of Cap 2, number 45 of 2013, under Section 4 of that Act, you'll know that many of them have been addressed. And that's why I said we must leave the past and move to the future. And it's the future that number 45 envisages. And in terms of the returns, NSSF is a DC scheme. It invests under the RBA guidelines. And the Act requires that whatever returns are made, they are credited account. Under Section 24 of the Act, when you retire from there, you can look at that. And basically, if we were to go by the requirements and that the administration costs are to be capped, then we should expect NSSF, since it is investing, since 80% of the investments are being done by fund managers, we should expect NSSF to make and give good returns to our members. Thank you.
Thank you so much, Mr. Richard. And as one of our experts in the industry, also Mr. Mwangangi has a contribution to make to that. Remember, we are thirsty for knowledge. We really need to know where we start. We need to know what is happening. And in that spirit, Mr. Mwangangi, you had a contribution to make in addition to what Mr. Richard has said, as we come to a close in the next few minutes. Mr. Mwangangi?
I would like to do three corrections, Irene, because if it is a contribution, we can talk longer. Number one, the right of association is not in Article 41, and it is misleading for the speaker to tell us the right of association is in Article 41. Two, the case in court does not seek to reduce contributions to NSSF to 200 shillings. That statement is misleading. It is a case in court on a technical issue relating to jurisdiction of our court, not reduction of contributions or even debate on the contributions that may go to NSSF or not. To that extent, when the speaker says people sought to return the contribution to 200, that statement is misleading. The third item, if I can remember it, it is again misleading for the speaker to say that we must consider social security in a manner which puts the law aside and consider it as ourselves. Ladies and gentlemen, we run a country which is governed by the rule of law, not rule of man. And it would be unacceptable to run our country by setting aside the law and making reasons from our brains. Thank you.
Thank you, Mr. Mwangangi. A good perspective over there on what exactly is in the court. Is it that we are disputing the increment, as we are saying, or is it the technicalities or other questions that we are raising? And I'm trying to see a question: doesn't that kill the free market and competitive edge? Why not start by enabling those Kenyans who don't save for various reasons to get support to do so as you build the fund for social support? And I think this takes us back again to the question of now with NSSF, Mr. Richard, is it right for us to say that it is the government providing social security for its people? What is the current status? And again, remember, like I said, this is a debate that can go on and on and on. Personally, I'm enjoying the debate because it creates room for us to learn. I think this is what we really call CBC. I'm not sure that Christine has been able to share the program that I wanted her to do, but as we come to a closure, Mr. Richard, you can respond to the aspect of killing competition by through what we have done vis-a-vis enabling those who are not able to save to get to a point where they can do so. Thank you.
Thank you so much, Irene, and thank you, my brother Boniface, for those interventions. Like you said, and probably I may not wish really to comment on them, but I have made observations. Some I may agree with you, some I may not agree. You know, you and I, our debates never end here. They'll even continue after this, but well, good comments. With regard to competition, and that's why I said earlier, the creation of tier 1 and tier 2, the philosophy behind it is to encourage competition. So essentially, it is to create a competition, is to enable private schemes to flourish. From where I sit, I see more employers going to create schemes. I see employers whose contribution rates have been below 6 going to increase their contribution rates. From where I sit, I see more Kenyans participating in social security. I see more good things. And anything else, I see it as fear that cannot be proved. Thank you.
Thank you. Thank you so much, Mr. Richard. I think I would want to, because I can't see any other messages that are coming through, but please, as you interrogate, I remember Mr. Richard kept saying, as we retire from here, let us go read here and there. Unfortunately, there's a flyer I wanted to share. I'm not able to do that. But I wanted to say that at Hallmark Institute of Professionals, we have a very rich curriculum developed and assessed and certified by the government under TVET CDAC. It is a competence-based curriculum that gives us the privilege to understand all matters pension management. And that, of course, starts us from all the way, a full curriculum called Certified Pension Manager, which has the following certificates of competency under it. We have the pension administration, trust secretarial, pension fund investment, fund accounting, auditing of pension funds, pension legal services, custody of pension assets, actuarial science, and to even make it richer, we have some basic units of competency like communication skills, entrepreneurship, so that at the end of the day, we have an all-round pensions manager. Because at the end of the day, I personally believe if we can professionalize the way we manage our pension institutions, then we will have attained quite a percentage towards the social protection in this country and even beyond. Other than that, of course, we have our academic and professional programs from NEC, from CDAC, from CASNEP, from HRMPEP for the HR practitioners, and many other, including the short courses, just to enrich us in as far as offering our services to our employers and to our businesses are concerned. I once again want to appreciate those who have stood with us as we host our previous webinars. I can't forget to appreciate the CPF, the NWELF, the BF Suma, the Tibu, which is a mobile medical company that will bring services to your office or to your home, and every other partner that is willing to work with us. You could reach out to us and we will be glad to work with you. I salute you, Mr. Mwangangi, for always giving us information and knowledge. Our chairman, Mr. David, and the Hallmark board and the management, we are so happy that you've given us an opportunity to dispense the knowledge. And tonight, I just want to say thank you so much, Mr. Richard. We can't thank you enough. I know it has taken you time to really research and to put this together. And as we continue to seek for knowledge, I think I can only say we will call you over and over again anytime that we need information so that we can get it from the best. Thank you so much for stepping in for us tonight and giving it your all, with all your passion, with all your knowledge. We really appreciate you, and we just want to say, may the good God really bless you. So with those many words, I see time is really gone. I want to invite one of us, Madam Jane Shege. Good to see you. I believe this is Jane, one of our pension students. I would request that you could close for us with a word of prayer, and I believe that you have learned something, and you can do that with also saying a word of thank you to our facilitator for the day, Mr. Richard. Madam Jane. Jane Shege, you can unmute. It seems like Jane is taking time. Jane, are you there? If not, Madam Betty Mushigi, good to see you. You can unmute and pray for us if you're still on. Madam Betty. Okay, it seems like she's also taking time. Allow me to close for us with a word of prayer. Once again, thank you, Lord, for the opportunity that you've given unto us to be able to learn the much that we've learned this evening. We declare your blessings upon our facilitator for the day. Thank you, even for our participants. So I declare your blessings upon them as we go to rest. My Father, may you give us the rest that we so desire. And even with the knowledge that we continue to acquire, we pray that you will enable us even to utilize it where it is needed, to the glory and honor of your name. Blessed be your holy name, for it's in Jesus' name that we pray and give thanks. Amen and amen. Have a blessed, blessed, blessed night. We will be letting you know when we will be having our next discussion. Asanteni sana.
Thank you, Irene. Thank you, Hallmark, and good night.